What's going on, everyone? Welcome to Eagle IFX. And guys, I believe that you're keeping well. And guys, I'm back again with another video, with another lesson. Thank you so much, guys, for your love. Thank you for subscribing to our channel. Thank you for the comments. We are so happy that at least we are helping. We are able to help some of you. So I want to show you one comment from one guy who sent me a comment, and I found out that it was very nice and very powerful, and I want to share that. Yeah, so guys, so this is the comment. I mean, this is it was very nice. So shout out to Ismail Said. I say my videos are giving real he says that my video give the real insight of what he's been looking for. He's been watching and practicing them. Then I can say as at now his winning percentage has increased from 30% to 75%, which is very powerful. So I'm just shouting out to I'm sending my shout out to Ismail Saidi. All right, so if you can just send me a message, maybe on Telegram or on Instagram, whatever it is, just reach out to me, and then let's talk. Let me see how much I can continue to help you even to be able to sustain these percentages. All right, guys, so let's go back to our lesson. And of course, in today, I just want to do a recap of I think we are on lesson 10 now. I want to do a recap of what we've been learning so far. I mean, it's been a journey of lessons, sharing. I started teaching you guys. Wait, before I forget, hit the like button, subscribe to this channel, and turn on the notification bell so that you don't miss out on this on any video that we upload. Yeah, so guys, I started by teaching you what I do or how I look at the market. Then I decided to get a funded account practically, of which I did, and then I actually applied what I was teaching and passed and got funded. So I have two accounts you can see here. I have one with 8 cap, another one with Think Market. So the 8 cap one is you can see, if you can see down here, you can see it's a real account already. Yeah, I'm already funded on that. Then we have this other one is by with Think Market. All right, so the other one is with Think Markets, which I'm still working on, yet to get funded. So I decided that I already showed you guys that I passed and everything. So I'm gonna do another video when I do my first withdrawal. So I just want to do a recap on the lessons and what we've been looking at and how to approach this market. So I'm starting with the Euro AUD. I'm gonna go through a few of them, and I'm gonna go through them very fast. So I'm starting with Euro AUD, and you can see that from the daily time frame, we see that we had this ascending structure over here. The market came all the way to this level. You can see that it came all the way to this level, broke out a bit, and then came back. All right, then when you go down, I'm actually interested with a move, this move that happened somewhere around here. Yeah, so you can see that what is happening here, you can see that we have an impulse move. So after the market went all the way to the top side, you can see that gave us this structure over here. Then the market came down, so we have an impulse move. Then we had this correction over here. Then we had what? We had a continuation. Then the market came back, and then now it came back again. Then you can see now it's giving us some sort of like a double bottom. Perhaps we're gonna see another sell to the upside, or the market could just actually it could just break and just give us a structure and continue going to the downside, to come all the way to our 90% rule, which is down here. So I want to show you how, or some of the things you must look for. And guys, like I keep on saying, you have to really keep practicing these things. All right, so for example, like here you can see that after this big correction over here, we had this market moving to the downside. And then now I want you to see how this market approaches this. So the reason why I drew this trend line over here, you can see that the market, normally you have to take 2 points and just connect them. You can see that the market was actually, you know, respecting this level. So you see that over here, you see we had this move, the market moved to the upside, came again, found some sort of like a support to the upside. Of course, now I was looking for a reaction once the market approaches that trend line once more. So on the 1 hour time frame, look at this, you see, look at this, the market gave us that descending structure over here. And like I kept teaching guys, you have to always look for what? You have to always look for the 3 touch. So you can see that we had our first touch over here, we had our second touch over here, then we had our third touch, and our third touch happened to actually be on this level that we, every time the market get to that level, we normally see a reaction. So you can see that. So on the 1 hour time frame, this could have been a place that you could have just entered over here, then maybe put your stop loss somewhere around here, around 22 pips, and definitely even if this was your first target, you are seeing a 6%, and the overall move came all there was 9%. So assuming that you didn't see that, so you can see that even here, if I draw this, we are also, that is actually a structure, we had a descending structure, and we are looking to see if this market could go to the upside. So of course, let's say you actually missed this, and you can see guys, if you go back to the lessons of what I was teaching about in the past, you can see, look at this, the market gave us a third touch, then came to give us some sort of like a like a double bottom. But I want to assume that maybe you are not able to catch this move, or you aren't sure about this. So what you could have done is you could have waited for, remember, you could have just waited for an impulse move, then our first flag, then you just trade this to the upside, and you can see what happened. Look at this. Immediately we had this impulse move, we were actually followed by what? We were followed by a correction, which is a what? Which is a clear flag, as you can see. All right, so even we can actually take this out. So you can see an impulse move, and then what? An impulse move, then a correction. And remember, we say that this candlestick, they have to be at least more than 6 to 8. 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16. So you can see you could have waited for 16 1 hour candlesticks, so it was more than enough, because remember that it has to be 6 to 8, right? It has to be at least 6 to 8, and you can see this was just beautiful. I mean, it was just very clear, with one touch over here, with a second touch over here, and with our third touch over there. So let's even assume that you are waiting for your third touch over there. What could you have done? Then you just play this out. Then once the market comes back and touches the line, gives you the third touch over there, then definitely you just enter here, and then your stop loss just to maybe below there, around 15 pips there about. And of course, we go to the 1 hour time frame. Let's assume that even this high was your first target, so we are looking at a possible 6%, but definitely the overall move is at that 11%, and you can see that after that the market just went straight to that level. I mean, it's as simple as that. Impulse move, it's as simple as impulse move, correction, continuation to the upside. So this is some of the things that I actually already had taught you guys, so it's not like it's anything new, you know. And you can see the confluences. So we have this level from this trend line over here, we have our 3 touches over there, right? Then we have an impulse move, and you have a first flag, which is a confirmation that we are actually going back to the upside. So you can see how the market just played out. So right now, look at where we are currently. We are here. So of course we have this level over here, you know, sort of like a double bottom, which is almost like a triple bottom. So what we are looking for, definitely we are looking for we are looking for buying opportunities to that level. So you can enter there, or you can just wait for the market to just give you a clear confirmation. Then then you can be able now to be involved, because you can see that here we have a clean descending structure. All right, you can see it's a clean descending structure. If you just clone that, you can see for yourself that we have something like that. All right, something like that. So of course we are on this level here. We are on a bottom over here. Okay, like that. You can just enter there, stop loss around 24 pips. Then of course we are looking for at a possible 9.28%. So it's as simple as that. It's as simple as that. Don't complicate things. Guys. Make sure that you are trading it as simple as possible. When you see the structure, but I normally will not trade this. This is very risky, because this market could actually decide to spike to the downside before it goes to the upside. Like a trade I took yesterday on Euro GBP, which actually I ended up closing on break even. You can see, look at that. So you can see that this was Euro GBP. You can see that I had my first touch over here, had the second touch, and then we had the third touch. I actually entered right here, and the market went. Then you can see this thing has just taken me out today in the morning. But you can see the market had actually played around 2.7%. So you can actually enter like that. You can actually enter like that, like the way this trade I had entered, and you'll be okay and you'll be good to go. So we can actually monitor this. You can add this to your watch list, and then we see how it's gonna go. So let's look at NSD card. This is also, I actually shared, don't know if I shared this, but you can see I'm gonna just show you the mindset behind this. So from the 4-hour time frame, you can see we had this descending structure, and here also we had this structure that was forming, and this structure had given us our 3 touches. So we had our first touch over here, we had our second touch, had a third touch, and then actually gave us 4 touches, a very strong impulse move. So immediately after the correction, I was looking for my first flag. So on the 4-hour time frame, you can see that this is how but it had 2 touches. So I was actually looking out to see if this market could actually come all the way to this level before it was a clean 8%. Okay, I actually missed this. It spiked because of because of the news, but I actually missed it. But you can see it's a clean impulse move correction. So you can either enter here the breakout, put your stop loss here, or you can wait for it to come. You enter here, put your stop loss somewhere around there, like they were done. Then you actually maximize on this move. But you can see I missed this trade, though I was not monitoring it. What could have happened is once it broke out, you can see here we had our first flag, of which could have still entered. This is 1 2 3 4 5 6 7 8 9 10 11 12. So you can see it was still valid, because we had 12 1-hour candlesticks, which still you could have actually entered here, and then maybe even just put your stop loss maybe above that wick, which is around 23 pips, or you can actually divide this wick into 2, put your stop loss somewhere around there, around 14 pips, and you can see this could have given you a clean almost 5%. But actually I missed this trade. Then another one is Euro NSD. This was a beautiful trade, and look at this level over here. This is the level I want you to see. You look at how the market approaches this level. All right, so we had this structure. All right, we had this descending structure. The market did not fill this gap, which was still fine. Then it gave us a move to the downside, then came to this high. So when it got to that high, then I put my trend line over here and started correcting to the upside. So I was looking for this structure, then enter somewhere around here, and then target this level over here. So if you look at this, maybe from the 15 minutes time frame, you can see that it was a clear one. So once once we were looking for it to come to that level, look at this. So I was looking for the third touch. So we have this, our first touch, we have a second touch, we're expecting our third touch to be here, of which the market never went all the way, but you can see it came. There was another structure forming here, right? But I don't want to go into that. But you can see clearly, though it never went all the way, you could have still entered here at this double top over there. Then maybe place your stop loss somewhere around here, around maybe 19 pips there about, because of course you can see that it's a clean double, actually triple top. And not only that, you can see the structure that has formed over here. All right, if you go to the 5 minutes time frame, and then maybe one day I'm gonna do videos on the 5 minutes time frame, but I will not go much into details on that. But you can see here as well another clear structure, right, of which maybe even you could have entered at the breakout, place your stop loss just above there, which is around 18 pips, and then even if you target this as your first level, that's around 5%. If you go back to the 1 hour time frame, of course this we were targeting this lower level over here, which is which is actually 10%. Actually played around 10.14. so you can see how it just went all the way from that level. It never committed all the way to our third touch, but it gave us structure, and that is the most important thing. Since it gave us this structure over here, then you enter, you place your stop loss there, and then look at that. It just plays out. You don't even need to worry about it, much, and to be stressed about. You just allow the market to play out. You risk 1% to get 10%. That's beautiful. All right. So let's look at another one. So these USD pairs, all USD pairs, they gave me the same structure. So the market was really consolidating. All right, so we had this high over here, then so we had our clean 3 touches, 1 2 3, this triple top. Then after the impulse move, definitely we are looking for our flag. Then the market came all the way, so this was another high that I'd marked, but the market gave me an impulse move. And I think on the 15 minutes time frame, yeah, look at that. It was beautiful. It was beautiful. It was beautiful. It was beautiful. So we had an impulse move. Then after the impulse move, we had this. So these are the places whereby you enter the breakout. You can place your sell stop over there. Then you don't want to place your stop loss a bit. That's a bit too far. You can just place it somewhere around here, above that level, be around 12 pips over there. Then you go to the 1 hour time frame, you look at the bigger structure, then definitely we'll be targeting this low over here around 7.15, and you can see what happened. It just actually played out completely. I mean, just went all the way to the downside without even coming back, which was the same with GBP USD. No, not GBP USD. This NSD USD. I'm gonna talk about GBP USD in a few minutes. NSD, you can see the structure was the same. Look at this, the double top that we saw here on odd USD. You can see the same thing over here, right? Then we had this bit messy, then we had an impulse move. Then definitely after the impulse move, look at this, we had our flag over there. Though it was not clear, maybe you could have been waiting for something like this, with 3 touches clear like that before you are interested. But you can see that immediately after this breakout over here, all right, there was this sort of like a hover, all right, something like that. So we had this, then we had a small one over here. Which one? This is coming from maybe like a bigger structure. So that one is still valid. You can still enter, you can still trade it, and then you can see how also this one it played out. For GBP USD, I was actually monitoring this trade, and if you see, I've not even deleted my tools. I looked at 2 things over here. There are 2 things. Now there's something we call the probable versus the possible, right? The probability and the possibility. So I was monitoring this trade for 2 things. This trade, I was looking at it that after this could have come all the way to give me my third touch before I am to the downside, or it could just break out and give me the flag. Then I'll still be interested on the downside. So definitely that's the reason why I had put those tools over there. But you can see it never did this. But look at this. Have you seen? It came, broke out, did some sort of like a retest, all right, here, then it went down. I'm sure if you go to the 15 minutes time frame, you will see here, look, you will see now the flag is clear. Look at this, the very clear flag. Now it doesn't matter which side it's facing, it could face down, right? But you can see that that was a clear flag with almost like 1, 2, and 3 touches, which could have either entered here, no, actually entered on the third touch. Either you enter there, your stop loss is just around there, around 12 pips, and you can see this move was actually 5%, or you could enter here the breakout, right? But you see now the stop loss become bigger. This was nice because it was happening at the breakout of the trend line, so it could have been safe. You know, sometimes we actually go further to the 5 minutes time frame to go and actually find these things, and you can see clearly, of course, this could have been your level of which you are looking at this market. All right, then you can see we had first touch, second touch, and the third touch went up a bit. Of course, you have to evolve with the structure over there. Then this could have been a nice place to enter. Then your stop loss just be above the structure there, about 11 pips, and definitely you want to target this lower level over there, which is around 5.95. So guys, you have to really backtest these things and you know, see how they play out, right? You have to practice. There is no a shortcut at all. This was the same thing. So this was now the opposite when the GBP pairs, the odd USD and GBP USD and SDUSD were selling. The USD JPY was also buying, and you can see it's a clear impulse move, an impulse move. Then we had a correction, then we had a continuation, and this was a clean 7% that was banked. You can see 7.36%. We had this structure over here. The market broke out, then it came back strongly. It was giving us a descending structure, came back strongly to give us this. Have you seen? Let me go to the 15 minutes time frame. Came back strongly and gave us this structure over here. All right, that structure over there. So it's not, sometimes it's not as clear, it's not very clear, you know, but you know how it is. The market is not perfect, so don't look for perfect setups. All right, but you can see it was a case of an impulse move. Though I entered at the breakout, once there was this breakout and retest, that's where I entered. I placed my stop loss below here. I didn't want to put my stop loss here. I felt that would have been a bit big, 336.2, so I just placed my stop loss somewhere around there, and you can see it just played out. Though the target was actually even this level, that's around 5.2. You can see the market ended up playing out around 7.36, which is the same with USD card. No, this is another one. All right, so USD card, guys, these are the things I've been teaching you. You can see we had our playground, of course. Then look at how the market approached this level. All right, we had our descending structure, and at our descending structure here we had our double bottom, of which could have actually entered your buys over here. Then we had a strong push to the upside. Assuming we missed here, after the impulse move, there must always be a what? There will always be a correction before the market continues to the upside, and you can see that is exactly what happened. Impulse move, look at this, followed by a what? A correction, then continuation to the upside. Then when we got up here, look at how the market started giving us structure, right? So the market gave us a very clear structure that actually went actually outside this double top line, which is good because now you can see that's mass psychology playing out. So what you can do is that you can go to the 15 minutes time frame. There are two ways to enter this. After this third touch, you can see we can call this our first touch, this is our second touch, and this is our third touch. So after that, we had an impulse move, then we had our first correction. You could have entered here, put your stop loss here, and then definitely do what? Let's target, let's say we are targeting our 90% rule is somewhere around there. Here These are 90%. All right, so even if you could have entered here, because we had this market level like that. So let's assume even you enter at the breakout somewhere around there, then your stop loss even can be above this high over here because it's not very big. You can see it's around 15 pips. All right, then of course look at your first target, which is around 5%, right? 5%, which actually played out. Or you could have waited for the market to come back inside the structure, right? And you can see inside this level over here, then it started sort of like consolidating. It was a bit messy, of course, but now also using the dollar index and knowing where the thing is heading to, this is also another place that you could have entered on the breakout and place your stop loss somewhere around there, around 20 pips. And even if this was your target, around almost 3%, and you can see the market is still playing out for 4.77, and definitely we are looking forward to this market coming all the way to this level, which is almost close to almost 8%. And look at what is happening right now. So the market has broken this level, and currently what is happening, look at this, the market is actually giving us that structure over there. So you can see that there's a possibility of entering here, then your stop loss somewhere around there, up there around 19.5, and definitely you can target this low, which is around 4.5%. So guys, so definitely just being, showing you how to look at this, So on my watch list, I had AUD card. All right, I have AUD card. Actually, I want to trade this. You can see we have this structure, we had this double top. The market has given us an impulse move, and then you can see now the market is actually trying to break out. So you can actually enter this, the stop loss around 13.6 pips, not bad. All right, then we had this one to almost 3 touches. You can actually enter this one, and then definitely from the 1 hour time frame, even if we start from here, it's around 4%, and of course to the bottom it's around 7.55%. That is AUD card. The same thing with this AUD CHF. We are actually on a significant high, so I was looking to see if this market had given me 2 touches. Remember, it's not a must. It comes back, but you see the market had given us these 2 touches, and of course we had this sort of like a double top. Let me clear this so that you can be able to see. So I was looking forward to see if the market could come all the way, but you see you can still enter somewhere around here, and your stop loss is up there. It's not bad, around 12.8%, and going all the way to the downside, you can target this level, which is around 6%. And definitely Euro GBP, just look at this, it has taken me out, then it's playing out my direction. I was targeting 5% to this level, and the reason is because of this. Is a structure, is a descending structure. Inside this descending structure is giving us another structure, and we have this. Let me show you. So we have this first touch over here, we had our second touch over here, so and then we had an impulse move correction. I was looking for a continuation at least to this level over there, but it's already taken me out. It's not bad. This is also GBP CHF. I was monitoring it today in the morning, but I think there was news. You can see just spiked, and then now it's actually playing to my direction. So guys, let me know in the comment section what you think, if you're getting value from all these lessons that we are sharing. If there is any pair you'd like us to look at and to watch that, guys, I'll be so happy to read from you. And yeah, so thank you so much, guys, for watching. Remember to like, to subscribe, to turn on the notification bell so that you don't miss out. And watch out, guys, my first withdrawal video is coming. The moment I do my withdrawal from my funded account, I'm gonna show you that as well. All right, guys, thank you so much for watching. Have a fantastic day. Cheers.